I'm David Bank, and from Impact Alpha, this is an Agents of Impact podcast.
12 years ago, I could make an impact investing map of Boston and have it be pretty complete. Now, that ecosystem is so complex that it is much, much harder to do.
That's Carrie Endries of Reinders McVey, a Boston-based wealth advisor that specializes in impact investing and sustainable finance. I caught up with Carrie to learn about the evolution of place-based local investment ecosystems, particularly in the Boston area. Reinders McVey targets investments in renewable energy, sustainable agriculture, and racial and economic justice. I think you'll enjoy the conversation. Carrie Endries, welcome to the podcast.
Oh, thanks so much, David. It's such a privilege to be here with you.
Carrie, you and I have been talking about sort of place-based local investment ecosystems, and in particular, your role as an advisor, seeing a huge interest from clients about that. So just tell us sort of how you frame it up and then what you're hearing from your clients.
Yeah, well, at Reinders McVey, we focus on sustainable and impact investing. And, many of our clients have been troubled by what might be happening out in public markets or the money that they have made over the last few years in public markets, and thinking about how they might have better impact in their local areas. We have many Boston and New England based investors. And so they're looking for, how can I do more with my money and have more of an environmental and social impact with it? So for us, we look for options, where they can feel like they're having a real tangible effect on neighborhoods around them.
Well, so tell us just who these clients are. So you've got families, foundations, size, number, like who are we talking about?
Yeah, so we work with a lot of individuals and families who tend to be high net worth to ultra high net worth, as well as foundations and endowments. That tend to be on the smaller side than the bigger world that many work in. And so, our foundations and endowments might be in the 10 to 30 million size. And, families and individuals more in the, 5 to 80 million size.
Okay, so these are folks who might have made some money either, through their own companies or in the public markets. They're looking around, and in particular, you said Boston, and I know you're in Boston, and we've met there in Boston, and there's a very active kind of ecosystem there in Boston. So let's take Boston as a little bit of a case study, as it were, and just like what are they seeing in Boston, and kind of what's driving the Boston impact investing ecosystem.
Yeah, so it's been a fascinating evolution, and I've been really lucky to be a part of it for a long time. I came to Reinders McVey in 2014, and this was meant to be part of the focus of my job, was to really structure the impact investing in the private sector. And I've seen opportunities evolve over time in different asset classes with different kinds of financial returns, but also with different kinds of philosophies in terms of, for a long time, there was the argument of you can have market rate returns or even above market rate returns and impact, to an evolution of maybe we shouldn't be expecting market rate out of all of the impact returns. And if you have impact first, then you might be thinking about how extractive are the returns for some of these, lower income neighborhoods that we might be investing in.
So impact first is kind of becoming a bit of a hashtag, I suppose. And folks who are in the trenches, I think, understand what that means. Sometimes the investors, I would guess, and the asset owners may not be as keen on that, and maybe as an advisor, it's a hard sell to make. So, are your clients down for impact first?
Yeah, so we talk a lot about what our clients' financial goals are alongside their impact goals. And we have many clients who have more abundant wealth than they need. And so that means that they can set aside a portion of their portfolio that might have a return that is, below market if they choose. And, these are investments. We are always looking to, at minimum, recycle the capital, meaning that you will get your principal back. but that you may not have the market level returns that you would if you had put that into the public market or, financial first kinds of investments.
Okay, and then just again to take it back to Boston, just give us some of the sort of contours or dynamics in the Boston community. Like, what are the investment needs?
Yeah. So Boston has been a fascinating place. Our clients have three major areas of interest: renewable energy and energy efficiency, sustainable ag and food, and then racial and economic justice. And I think in Boston, specifically, the racial and economic justice piece is really interesting. The Boston Fed put out a report in 2015 about the enormous racial wealth gap in Boston, where it was shown that Black families had an average of $8 in assets, while white families had an average of $250,000. So I think that racial wealth gap really set up, a number of people to say, wow, okay, how can we attack this? This is something that is so problematic. How do we create wealth in communities? How do we think about what kinds of investment opportunities there might be? And how do we bring in capital to start to, close that gap?
Well, so 2015 was a decade ago, and I would think that the stats might show that that gap has actually gotten wider in the subsequent years. Not to disparage any of the efforts you've made, but kind of what are the interventions that folks might make to have a impact on that?
Well, so I think we have a few funds that are just really thoughtful about how they work in communities. And, so for example, the Boston Impact Initiative was early on in this and thinking about how they might build into loan covenants with companies they work with to build wealth in neighborhoods. So it might be, how many employees are you hiring? Are you paying a living wage for the Boston area? Are you thinking about your suppliers? And are they underserved suppliers? Are there suppliers where you can hook up with them to create more wealth in low income and communities of color that might not have been the ways that people had thought about it in the past? And so Boston Impact Initiative was really a forerunner in thinking about this and pushing in all directions to think about how do you create wealth through small businesses for sure, and the entrepreneurs that start those businesses, but also in every part of the ecosystem with their suppliers, with their workers, etc.
Boston Impact Initiative, I think we reported, had just raised its second fund. I think $22 million, even a little bit over what their target was. And as you say, like hundreds, I think more than 200 different investors. So that has become kind of a rallying point for local Boston investors.
Definitely. And it's pretty incredible the work that they have done. This is really the third fund. The initial fund, founded by Deborah Fries, was an example where she tried to create a model so that it could be replicated with multiple investors coming in. They also created an interesting model with accredited investors taking on a little bit more risk and less return than unaccredited investors. So that's usually a flip from many other types
Oh,
of funds.
just pause on that because that's fascinating. Because the accreditation of investors, obviously, at least on the surface, is supposed to protect maybe not so well-to-do investors from the risks of these kinds of investments. But one of the implications of it is that the well-to-do investors actually get a better pick of investment opportunities, and everybody else gets left with what's left over. So this kind of turned that a little bit on its head, I guess.
It did. It did. And also that, in with their fund and of course many other funds started to work with foundations to think about how they could use loan guarantees, for example, or charitable funds to guarantee a portion so that the risk was less for unaccredited investors coming in to the fund because could not take the same risk and afford to lose money.
Right, right. Another example, I think it does come out of the same Boston Impact Initiative kind of orbit, is the Ujima Fund, which has been held up as an example of a real kind of democratically governed local fund with true neighborhood representation. my sense is that it was going to be, kind of a model for many more such things, and there is a smattering of similar kinds of efforts, but that's a tough road to hoe, I think.
It is, but and they were founded in 2016, but they have really created an ecosystem. I give them so much credit for how much work they have done in, having financial education classes, as well as developing businesses and really promoting some of the places that they've made loans to, so that those of us who are around Ujima as members or investors can go to Comfort Kitchen, a local restaurant, or Ama, a new restaurant that is opening that's also being funded by a loan from Ujima, and really feel like that we have that tangible kind of circular investment in wanting to see our investment do well.
Terrific. And so just maybe sketch out what are the elements of a local impact ecosystem. Like, are there, anchor institutions, as it were, that play a key role? Like, what should folks maybe in other cities think about as they try to kind of put together the pieces?
So I think it's really important to have a few foundations, um, and maybe especially community foundations that are fundamental supporters in some of the local investing. Then it's so important to have some people from, more mainstream finance that help to think of these different creative financial products, different kinds of assets, in the capital stack. That is something that wasn't my background. And so when you pair people who have that kind of knowledge with those who are doing the activism and the impact work, that is when you can really create something that is useful and helpful rather than extractive overall.
Well, Boston and the Boston area, I know, is a surplus of talent and ingenuity, obviously, and I think also of intention around some of these kind of issues. What about the Boston Community Foundation? Have they played that role?
Mhm. Yeah. So, the Boston Foundation is now developing a Mission First fund, which has Boston Impact Initiative as one of its investments in it. Very exciting to see everything come together. But, they've always had an impact pool for their DAF holders that they can invest in. But that impact pool has been something that has been broader, sustainable public markets and kind of national impact, much larger funds. And this Mission First fund that they're doing is going to have more of the local investments like Boston Impact Initiative, and they're doing something that is more like an opt out, so that DAF holders will have a small percentage of their assets in this Mission First fund unless they choose to opt out.
So DAF,
So
of
that's
course.
very exciting.
That is, and DAF you mentioned being, of course, donor advised funds, which exist at community foundations. They also exist in some of the bigger financial institutions like the Fidelities and Schwabs of the world. But they're a kind of interesting pot of capital that's sitting out there, and in many people's view, kind of underutilized pot of capital because the tax break has already been granted. The money is sitting there, but in many cases, it actually hasn't been pushed out to the organizations and the entrepreneurs and the nonprofits, even in a grant form, but certainly not so much in a investment form. And so, what can be done to activate this DAF pool of capital?
Yeah. Well, I mean, what's great is that you have a captive group of people who have created a donor advised fund because they have charitable intentions. And many of them are passionate about their local area. So at the Boston Foundation or Cambridge Community Foundation or Essex County north of us, trying to come up with these impact options for this DAF money that sometimes is sitting there because it is waiting to be gifted out in future years. It's a perfect opportunity to bring impact into the investment portion that will align with the grant making that the DAF is doing. Just like a foundation, that must give away 5% every year, it's got its 95% to activate that it could put towards aligning with its mission, rather than sitting in simply financial first without any real conscientious thought given to how the investments are made.
And so these local opportunities, local institutions, I always think that local becomes more popular and sort of salient when national becomes a little maybe out of reach or maybe unresponsive. Choose your word for the current situation. Is that what's going on now? People are saying, well, we can make some difference closer to home.
Yeah, I think when the national stage feels harder to affect, people are thinking a lot about their neighborhoods, and of course, with recent changes, even in Massachusetts, when you're thinking about immigration here and the effects on immigration from current policies and the administration. Um, and just general economics and the fact that you have a K-shaped economy, you have a lot of not only a racial wealth gap, but just an economic, wealth gap occurring as the middle class gets hollowed out. We talk about that a lot in Boston. That middle class is really getting hollowed out. You have a lot of challenges with middle class housing. So thinking about some of those opportunities, like East Boston Neighborhood Trust was really interesting project put together by a number of public and private entities to try to save about 130 apartments in East Boston, which is a rapidly gentrifying area. So, really exciting to think about how you can put these projects together with different types of capital, and and then preserve housing so that it doesn't go away.
You mentioned immigration, which of course has been obviously a hot topic, and in some cities more so even than Boston. But it's not only the kind of ICE raids and kind of things that are grabbing so much attention, but even much subtler things like SBA rules about whether green card holders can or can't get small business loans. That must be affecting the lenders, obviously the businesses themselves, and then the communities.
Absolutely. Yeah. I was just talking to a CDFI in our office the other day that was saying that, they fund a lot of childcare facilities that are often run by recent immigrants. They tend to be culturally sensitive, and they are green card holders. So they can no longer receive SBA money. And so the CDFI has to look elsewhere for other types of funds. And sometimes that means they're coming to us and they're coming, for our clients' impact money to replace that funding.
So just take it to sort of back to the beginning, and Carrie, as an advisor, and you're talking to your clients, and they are have the intention, they have the wherewithal. Can you really tell them that they're going to be able to make a significant impact with their investments? Are you able to satisfy that aspiration, that hurdle rate, as it were, the impact hurdle rate, not just the financial hurdle rate?
Yeah, well, I mean, I think what you have is you have a continuum from, making charitable grants that are made once, and you have a certain type of impact. And those are necessary. Don't get me wrong. And then you move along a spectrum to this impact investing where you have an environmental or social impact that you are really working for. And of course, I think there's a lot of cynicism about investing in general, and certainly with public markets, because public companies seem very, very far removed, and it seems like it's really hard to have influence there. And I think that's why the especially local place-based investing is so meaningful and to clients, because it's really tangible. You're going by this multifamily housing complex, and it's got solar panels on the roof from Sunwealth, and you invested in Sunwealth, and that's in the fund that you invested in. You can really see how your money is attached to something that you can feel proud of. And I think that's a real difference. They don't necessarily need to know what are the greenhouse gas emissions that were avoided, or what are the kilowatts produced. What's important to them is knowing that they're supporting solar in a time period that nationally solar is out of favor, but they feel like for the long term, this is a place that we need to move to.
And then just in the case of Sunwealth, thing, the co-benefit there is I know that they work with a lot of local contractors and small project developers, so that you're keeping that installation money in the community. It circulates around again, and so that's a perfect example. You can actually see it on the rooftops in your community,
Yes,
and
absolutely. And they've been thoughtful about workforce development and thinking about which solar installers have more access to capital and which don't, to try to broaden the field. And, so I think that's what's amazing about many of the partner organizations that we work with is it's not just solar. This is also, many other things of, reducing the gap of access to capital, of, expanding and rejuvenating a workforce, like all kinds of other things that really intersect together.
Well, Carrie, we talked to a lot of advisors, and they're just getting their feet into impact, mostly because, as you say, the clients are demanding it. Whether that's the next gen, or sometimes women are more keen to it, and they're trying to figure out how they can serve up these impact opportunities. Sometimes, to skeptical family members. You sound like you're in the catbird seat with a client base that's actually pushing you to look harder, and that must be very gratifying. So thank you so much for joining us.
Definitely. I mean, it's such a privilege to have been in the middle of impact investing in Boston for the last, 12 years, and to see how it has evolved tremendously during that time period. Like 12 years ago, I could make an impact investing map of Boston and have it be pretty complete. Now that ecosystem is so complex that it is much, much harder to do.
Well, that's a good problem to have, Carrie. Thank you. We'll be checking back in to see how that ecosystem is developing. So thank you so much for joining us.
Thanks, David. Great to talk with you.
That's going to do it for this Agents of Impact podcast. Big thanks to Carrie Endries, to our producer Isaac Silk, to the whole team at Impact Alpha, and to all of you Agents of Impact, with deep gratitude for all that you do.